Hi everyone, this is your host and I welcome you all in this very webinar. As you already know, the tax filing season is here and it's like we are in a very less time when we have to file our tax with all the things and we are here like going to the CA, calling up the people, how to do this and that. And for all these doubts, we are here with a speaker and let me introduce our speaker. This is Vishwadesh Sonangara. Vishwajit is an entrepreneur, programmer, mentor, and a proud father. He has done his bachelor's in engineering in computer engineering from North Gujarat University and done his MS in computer science from Rochester Institute of Technology. Vishwajit has previously worked at Fidelity Investments, Deutsche Bank, and Thomson Reuters. Vishwajit helped to build personal financial planning and portfolio advisory tools at Fidelity and a financial services platform based out of Boston. Also an early employee at Deutsche Bank North America Development Center, Vishwajit helped to implement Dodd-Frank and Basel III regulations post to 2008 global financial crisis. Right now, Vishwajit is the founder of Quico and a Sandbox. Quico is a tax planning, preparation, and filing platform for the individuals, small businesses, and others. Sandbox is a full stack tax compliance API platform for banks, NBFCs, fintechs, and e-commerce and more. Quico currently serves 1 million individuals and small businesses, and we are delighted to integrate with the Quico. Sandbox has Amazon, Uran, Airbnb, Zerodha, Coinbase among its customers. As you know, Nitin Kamath, the founder of Zerodha, has also invested in Quico through Rainmatter Fund along with startups like Smallcase and DGO. So it is very delighted that we are with the integration with Quico and we are simplifying your tax filing journey. Over to you, Vishwajit.
All right. I hope you all are able to see me. Prajwal, thank you very much for those kind words and a very in-depth introduction. I think we've been integrated with IIFL. IIFL has been one of the early adopters of integrations with larger capital market ecosystem, enabling traders, investors not just to invest smartly, but also then achieve personal financial goals, do their taxes. And we are fortunate that you have entrusted us with that responsibility of helping your customers do their taxes. This is July. Everybody knows this tax filing season. 31st July is the due date to file income tax return. And Prajwal and I work very closely in order for IIFL customers to succeed and file their income tax returns on Quico's platform. We thought, what better way to kickstart the tax season than doing a webinar, taking up common questions from investors, traders. There are a lot of questions. काफी लोगों को questions होते हैं around tax treatment on investing trading activity. काफी questions around losses, setting them off, carrying them forward. Tax audit is another taboo subject. So I wanted to broadly come here and cover all those topics so that आप जब tax filing करें, confidently करें इस tax season, चाहे वो government portals पे करें, चाहे offline chartered accountants के पास करें, या Quico जैसे किसी platform पे करें. So I think without further ado, I'll share my screen and start the presentation. Let me know if you are able to see my screen, if you can give me a thumbs up. All right, I hope everybody is able to see my screen. Cool. So Prajwal has already given a very nice introduction of Quico. If you don't know already, we are a fastest growing tax platform in India. We help individuals save, pay, and file taxes, as we like to say. So engaging customers early from beginning of financial year, helping them choose the right tax regime. Especially investor traders को काफी दिक्कत होती है advanced tax pay करने में, तो we help them pay advanced taxes. We help them invest into tax saving funds using our broker partners, including IIFL Securities. But then during tax filing season, we help them collect all the data programmatically and help them file their income tax return with ease. आप दो तरीके से कर सकते हैं, आप खुद से कर सकते हैं, which I would strongly recommend. I often tell my team that penny saved is penny earned. So if you know about your taxes, if you know about your personal finances, then you could save a lot of money by being aware about it. So I think about myself, Prajwal already introduced. Again, I'm founder here at Quicko, and I'm going to walk you through some foundational topics of taxation for investor traders, and then hopefully we'll be able to take a few questions. About Quicko, already we've talked a lot about it, but we are based out of Ahmedabad, and we are a very young team of designers, developers, content creators, and chartered accountants. I myself, I'm not a chartered accountant. I'm a computer engineer. Now, oftentimes people ask, how did you end up starting or founding a text platform? And I think oftentimes the answer lies in, people who are outsiders are often able to challenge the status quo, right? Ask first principle questions. And that's what we did as a bunch of engineers. We felt that, while mom and pop kirana store or an offline business might do transactions in cash, but there are millions of people like you and I, जिनके सैलरी उनके बैंक अकाउंट में डिपॉजिट होते हैं, जिसपे टीडीएस डिडक्ट होता है. हम लोग डीमेट अकाउंट के थ्रू ट्रेडिंग करते हैं, जहां पे एसटीटी डिडक्ट होता है. तो हमारे ट्रांजैक्शन, हमारा डिजिटल लाइफ, हमारा पूरा लाइफ डिजिटल लाइफ है, एंड हमारे सारे ट्रांजैक्शंस बैंक ट्रांजैक्शंस है. तो फॉर दोज काइंड ऑफ पीपल, व्हाई कांट वी बिल्ड अ प्लेटफॉर्म जो बहुत ईज एंड कन्वीनियंस के थ्रू टैक्सेस को सुलझा सके इन्वेस्टर्स, ट्रेडर्स के लिए, सैलरीड इंडिविजुअल्स के लिए, फ्रीलांसर्स के लिए. तो दैट्स हाउ आई एंडेड अप स्टार्टिंग क्विको. एंड काफी लोग ये भी पूछते हैं कि व्हाई आउट ऑफ अहमदाबाद. तो जस्ट लाइक कोटा, एवरी इंजीनियर और एनी aspiring engineer knows about Kota. Same way, any aspiring chartered accountant knows about Ahmedabad. It's a mecca for CAs. There are a lot of CA institutes. Students from all across Northwest India come to Ahmedabad. So then what better place to start a text platform than Ahmedabad? I think आज हम यहाँ पे connect हुए primarily to talk about कि 31st जुलाई से पहले अगर आपको टैक्स फाइल करना है कि नहीं, and अगर 31st जुलाई से पहले फाइल करना है तो उसके लिए क्या क्या चीजें आपको ध्यान में रखनी पड़ेगी. तो आई ब्रॉडली कवर दिस 7 or 8 टॉपिक्स. सबसे पहले मेरे को कवर करना है ट्रेडिंग एंड इन्वेस्टिंग का डिफरेंस. मोस्ट कॉमनली आस्क्ड क्वेश्चंस क्विको के सपोर्ट चैनल्स पे, हमारे Q&A चैनल्स पे ये होता है कि क्या मैं अपना कैपिटल गेन्स एज अ बिजनेस प्रोफेशनल रिपोर्ट कर सकता हूँ या वाइस वर्सा. तो आई थिंक वहां से कब चालू करेंगे, एंड देन विल टॉक अबाउट टैक्स ट्रीटमेंट ऑफ इन्वेस्टिंग एंड ट्रेडिंग इनटू डिफरेंट सेगमेंट्स. काफी टाइम चार्टर्ड अकाउंटेंट्स, कैपिटल गेन्स एंड बिजनेस प्रोफेशन हेड्स की बात करते हैं, बट आई थिंक इन्वेस्टर्स एंड ट्रेडर्स ज्यादातर समझते हैं फाइनेंशियल इंस्ट्रूमेंट्स में इक्विटी डिलीवरी में क्या टैक्सेबिलिटी होगी, SIPs करेंगे तो क्या टैक्सेबिलिटी होगी, डेरिवेटिव्स ट्रेड करेंगे तो क्या टैक्सेबिलिटी होगी. तो हम लोग फाइनेंशियल इंस्ट्रूमेंट्स के पॉइंट ऑफ व्यू से टैक्सेबिलिटी देखेंगे. लॉसेस एक काफी इनकन्वीनियंट टॉपिक है. किसी को भी लॉस इंकर करना पसंद नहीं है, बट काफी टाइम मैं ये देखता हूँ कि इन जनरल ट्रेडर्स इन्वेस्टर्स ऐसा सोचते हैं कि लॉसेस है तो टैक्स रिटर्न फाइल करने की जरूरत नहीं है. तो हम उसको भी कवर करेंगे. एंड देन मोस्ट इंपॉर्टेंटली गिफ्टिंग ऑफ शेयर्स, जो कि काफी ट्रेंड में है. पेरेंट्स आजकल शादियों में बच्चों को शेयर्स गिफ्ट कर रहे हैं, फ्रेंड्स कलीग्स एक दूसरे को शेयर्स गिफ्ट कर रहे हैं ऑन गुड ओकेशंस. तो उसके बारे में भी थोड़ा बात करेंगे. एंड फाइनली आई विल शो यू कि अगर आप क्विको से टैक्स रिटर्न फाइल करना चाहते हो तो हाउ इजी इट इज एंड कैसे कर सकते हैं. तो लेट्स स्टार्ट विद ट्रेडिंग एंड इन्वेस्टिंग. आई थिंक बहुत सिंपल है. मुझे किसी ने बहुत अच्छी तरीके से समझाया था कि जब आप किसी भी पोजीशन को अक्वायर करते हैं, अगर आपको उसका एग्जिट डेट आपके दिमाग में नहीं है तो उसको बहुत इजीली इन्वेस्टिंग कहा जा सकता है, बिकॉज आप उसमें लॉन्ग टर्म इन्वेस्ट करने वाले हैं एंड आपका गोल है वो लॉन्ग टर्म कैपिटल अप्रिसिएशन के थ्रू प्रॉफिट्स अर्न करना. तो काफी सिंपल डेफिनेशन है. इन्वेस्टिंग इज ऑलवेज डन विद इंटेंट ऑफ लॉन्ग टर्म कैपिटल अप्रिसिएशन, and hence it's considered any gains, profits or losses arising out of it can be considered capital gains or losses. Now trading usually हम करते हैं market में जो fluctuations है because of macro और micro economic situations, wars हो गए, US फेडरल रिजर्व ने इंटरेस्ट रेट इंक्रीज कर दिया, उसके कारण मार्केट में जो फ्लक्चुएशंस आए. commodities के shortages के कारण जो fluctuations आते हैं, तो जब आपका objective market में जो fluctuations है prices के, उसका advantage लेके उसमें से profits earn करना है, तो उसको common sensically business activity गिना जाएगा, because you are trying to just like manufacturing or trading of goods and services, you are trying to earn money by taking advantage of taking advantage of the fluctuation in prices. यहाँ पे goods या service नहीं है, but financial instruments. All right. So ये काफी simple definitions है. अगर आप कभी भी ये क्वेश्चन किसी से पूछे कि भाई मेरे को कैपिटल गेन्स में रिपोर्ट करना चाहिए या बिजनेस प्रोफेशन में, तो आई थिंक यू नीड टू आस्क योरसेल्फ कि आपका इंटेंट क्या था, एंड देन यू शुड नॉट चेंज दैट इंटेंट आल्सो, राइट? सो लेट्स से काफी लोग आउट ऑफ कन्वीनियंस, बिकॉज कभी उनको टैक्स बचाना होता है, कैपिटल गेन स्पेशल रेट टैक्सेस है, उसमें यूजुअली ज्यादा टैक्स भरना पड़ता है, जबकि बिजनेस इनकम स्लैब रेट टैक्सेस अप्लाई होते हैं, तो कभी कभी बिजनेस के अंदर बेनिफिट भी होता है, टैक्सेस कम पे करने पड़ते हैं, तो लोग बेस्ड ऑन टैक्सेबिलिटी क्या है उसके बेसिस पे ट्रीटमेंट चेंज करना चाहते हैं. तो आई वुड स्ट्रांगली रिकमेंड अगेंस्ट दैट, बिकॉज इन दैट केस अगर आपको स्क्रूटिनी आती है फ्रॉम असेसिंग ऑफिसर, तो यू विल हैव टू जस्टिफाई कैसे वो इंटेंट आप आइदर ट्रेडिंग या इन्वेस्टिंग में जस्टिफाई करेंगे, राइट? सो प्लीज मेक श्योर कि आप अपना जो इंटेंट है उसके अकॉर्डिंग रिपोर्टिंग करें, देन यू विल नॉट फेस एनी इश्यूज. नाउ मूविंग ऑन, अगर आप इन्वेस्टिंग या ट्रेडिंग में से कुछ भी या दोनों ही करते हैं, तो उस केस में क्या टैक्सेबिलिटी रहेगी, उसको समझने का ट्राई करते हैं. तो यहाँ पे आई थिंक अगर लेफ्ट हैंड साइड कॉलम आप देखें, तो यहाँ पे हमने सेगमेंट्स की बात की है. दिस आर कॉमन फाइनेंशियल इंस्ट्रूमेंट्स जिसमें इन्वेस्टर ट्रेडर्स इंडिया में इन्वेस्ट करते हैं. नाउ देयर आर सो मेनी डिफरेंट फाइनेंशियल इंस्ट्रूमेंट्स दिस डेज, स्टार्टिंग फ्रॉम PMS या AIF, काफी लोग इन्वेस्ट कर रहे हैं आजकल क्रिप्टो में. बट व्हाट आई वुड से इज, अपार्ट फ्रॉम क्रिप्टो, हम लोग क्रिप्टो के बारे में भी क्विकली बात करेंगे टुवर्ड्स द एंड ऑफ दिस, बट इफ यू are investing in equity shares MF ETF या debt MF ETF, or if you are investing in a portfolio advisory services या alternative investment fund, at the end it's using one of these vehicles, right? Either a debt instrument like bond, debenture, or it's using a equity instrument like shares. Then the tax treatment is going to be very much alike, right? It's not going to change. So hence this 5 segments very clearly and broadly cover taxability of investing into stock markets today, right? So let's talk about them. So सबसे common equity delivery या SIPs करना mutual funds ETFs में. तो in that case अगर आप उसको 365 days से ज्यादा होल्ड करते हैं, तो वो लॉन्ग टर्म कैपिटल गेन्स कंसिडर किए जाएंगे. इफ यू होल्ड इट लेस देन 365 days, then it will be considered short term capital gains, right? Now long term capital gains will be taxed at 10% and short term capital gains will be taxed at 15%. Now you may ask why this difference, why long term capital gains are taxed at lower rate compared to short term capital gains, and that's primarily because the government wants you to invest into capital markets of India. Government wants you to provide liquidity funds to businesses so they can invest back in form of installing a new plant or expanding an existing factory or hiring more people and creating job opportunities for folks. So when you invest long term into businesses are able to do all these things, and which is why government is incentivizing you investing long term into businesses, and hence the tax rates are low. While if you invest short term, it usually induces uncertainty. It induces volatility, as we know, and because of that, government is charging you higher tax rates, which is 15%. Now, a lot of people ask, what if we receive ESOPs, right? We are working at multinational corporations, we are receiving RSUs. Those are also equity instruments, as long as the business is listed business, listed in the sense it's listed on one of the Indian exchanges. Then great, in that case STT is paid, so their treatment is RSU and ESOPs treatment will be very similar to equity shares. Mutual funds and ETFs depends on their asset allocation. So as you can see, the first and second row, we have equity MF ETF and we have debt MF ETF, right? So as per Income Tax Act, if if more than 50% of your mutual funds asset allocations are towards equity instruments, then it's considered an equity MF. And if it is more than 50% towards debt instruments, then it's considered debt MF, right? So now debt ka treatment समझते, तो debt के case में holding period, if you hold it for more than 3 years, then it's considered long term. And if you hold it for less than 3 years, then it's considered short term. Now, bonds and debentures are also debt instruments, and they are also taxed in a very similar fashion to debt MF via ETF. Okay. Now, you may ask why foreign securities fall into the same bucket, right? So, essentially, the Income Tax Act only states that any capital asset that is held for more than 3 years will be considered long term, and less than 3 years will be short term. And the standard tax rates are 20% and slab rate. It's only in case of some of this equity shares and equity mutual funds is where an exemption is given, and the holding period requirements have been reduced from 3 years to 1 year. So foreign securities are because STT is not paid, taxes are not paid to Indian government. So foreign securities are also, whether it is equity or otherwise, is taxed similar to debt instruments or any other capital asset for that matter, right? Now you may ask, Vishwajit, you haven't covered real estate. What if we sold ancestral property, or we sold land, ancestral land? What happens if we sell jewelry or gold bullions, right? Now real estate capital gains rules are a little different. They are not listed here, but if you hold them for more than 2 years, then they are considered long term. And if you hold them for less than 2 years, then it's considered short term. Well, if we talk about gold bullions, jewelry, and those kind of things, then they are considered other capital gains. And there again, the treatment would be very similar to bonds and debentures. If you hold them for more than 3 years, then it will be considered long term and taxed at 20%, and short term will be taxed at slab rate. Now you may ask, what is slab rate, Vishwajit? So slab rate is essentially the progressive tax regime that India has adopted, right? Which means if your income is, let's say, 10 lakh, then 0 to 2.5 lakh is exempt. I'm talking about old regime. So 0 to 2.5 lakh is exempt. 2.5 to 5 lakh is taxed at 5%, and then 10%, and 20%, and 30%. If your income is more than 10 lakh, then it will be taxed at 30%. If you go to new regime, it has similar kind of slab rates with some variations, right? So that's what slab rate income is. So if you invest into now intraday, right? If you do intraday trading, then it's not, your intent is not investing, right? यहाँ पे आप जो market में fluctuations हो रहा है, उसका benefit लेके profit earn करने का try कर रहे हो, तो it will be considered a business profession. Also intraday में, because आप delivery नहीं ले रहे हो instrument की, that means you are trying to speculate, right? And hence it's considered speculative business profession income. But when we talk about futures and options, so futures and options are also derivatives. काफी लोग उसको hedge करने के लिए, अपने positions को hedge करने के लिए use करते हैं, but आज काफी लोग futures and options contract में trade भी करते हैं. So again, futures and options, because you are trying to take advantage of price fluctuations, will be considered a business profession income and will be taxed at slab rate. Now, I hope this kind of clarifies the basic foundation of investing and trading. We talked about difference between investing, trading, and we also talked about broadly the segments that you must be trading in, and what is the tax treatment of each one of them. Now, काफी time I tell my team that income tax is quite commonsensical. So इसमें से काफी सारी चीजें अगर आप common sense नजरिए से देखें, तो it will make sense. I know a lot of time we go to different people, multiple people will give different advices, and hence there can be a lot of confusion. But what I have learned over the last 7-8 years building tax products is if you look at it from commonsensical point, जैसे मैंने बोला, okay, if you are investing long term, then tax rates are lower, versus if you invest short term, then tax rates are higher. If you are investing, if you are participating in the market with a quick profit, then it will be considered business professional income, things like that, right? Now let's talk about losses ka treatment. This is very commonly asked question. Lot of people between 2019 and 2022, because of COVID, everybody was at home. There were no other expenses. There were no thank God Friday expenses. There were no shopping expenses. So a lot of people had discretionary savings, and what people ended up doing was they ended up opening their Demat accounts. We saw a number of Demat accounts in India grow from 1.5 crore to almost 10 crore Demat accounts. While we had 30-40 lakh active investor traders few years back, today we have 3.5 crore active Demat accounts in India. These are not data produced by me. These are SEBI produced data. So markets have seen tremendous participation from retail investors over the last few years. Now, what does that mean? That means all these investors will go through the bull cycles and bear cycles, right? And while 2020, 21 and 22 were bull cycles, everybody who participated in market in one way or the other way was in green and made some profits. Last year and a half have been a little difficult, especially since Federal Reserve started increasing interest rates. US markets definitely have seen correction. Indian markets are at all-time high, but at the same time, we see that people who have invested over last year and a half oftentimes have losses in their portfolio. So it becomes really important to understand treatment of losses. Like I said towards the beginning, oftentimes people feel that when they have incurred losses, there is no tax liability. And if there is no tax liability, hence they don't need to report and file income tax return. But if you don't report those losses, first of all, a lot of this data, all your financial transactions are getting reported to income tax department. So if you don't report it, then you are highly likely to, receive a notice. If you don't report it, you can't even, carry forward them. Just in case in future years, let's say if we go into achhe din of stock markets, then in that case, if you have gains, profits, then all these carry forward losses, you would be able to set off in against future incomes. And in that case, you can reduce the taxability of those future gains, right? So let's quickly understand how to treat losses. So when we talk about losses, we have to understand two kinds of losses. There are current year losses, right? Any trading activity that you did in current year, and there are brought forward losses, right? Which is essentially losses from your previous year trading activity that you weren't able to offset because maybe you didn't have taxable income, and you ended up carrying them forward. And those are called, those become brought forward losses into current assessment year. So let's understand the treatment. So if you have long-term losses, right? That is essentially investing into equity delivery or mutual funds and selling them after 1 year, then those losses can only be set off against other long-term gains. Now, these long-term gains can be from any capital asset. It can be from equity shares, it can be from mutual funds, or it can also be from real estate. You can set off long-term capital losses against any other kind of long-term gains. Short-term capital losses, you can set off against any short-term gains or long-term gains. And now you may ask why long-term gains, long-term losses can only be set off against long-term gains. The answer is, again, common sense. Long-term capital gains are taxed at lower rate. So what income tax department is saying, if you incurred losses in a lower rate income, then I don't want you to set them off against a higher rate income. That means they don't want you to set off long-term capital losses against short-term gains, which is a higher rate income, right? While short-term losses are higher rate losses, so they are okay if you set them off against either long-term or short-term. Okay, very, very easy to understand. Now, even if you have brought forward losses, either long-term or short-term, the same rules will apply. The thing about capital losses that they can only be set off against. These are the only type of losses that can be set off against just capital gains. You cannot set them off against any other income head. So what am I saying? Let's say you have losses from equity delivery. you cannot set them off against your salary income, right? Agar wo provision hota, to a lot of people would say, here is my salary, but here are my losses. Hence, I don't have to pay any taxes. So, income tax department is saying that if you are taking risk by investing into capital market, you should be able to take both positive risks, and you should be able to bear the consequences of positive side of it and negative side of it. So you can only set them off against other capital gains, not against any other income head. Now, when we talk about business profession income arising out of intraday, it can, I'm talking about the last line item here, intraday profits, intraday losses can only and only be set off against intraday gains, either of same year or the previous year, right? So what does that mean? Let's say you have intraday gains this year, and let's say you had intraday losses last year that you brought forward, then you can set them off. However, previous year's intraday losses cannot be set off against any other income. When we talk about losses arising out of derivative, the relaxation there is derivative losses can be set off against any other income head except salary. What does that mean? If you have derivative losses, you can set it off against, of course, intraday gains, but you can also set it off against any other capital gains, and you can set it off against, let's say, आपका rental income है, कोई property own करते हैं जिसमें से rental income आ रहा है, तो you can also set it off against rental income. Now, oftentimes people ask, what are the rules around carrying forward losses, right? So you can carry forward losses for up to eight years in most cases, except intraday losses that you can only carry forward for 4 years. A common question that I get asked is, Vishwajit, that means for next 8 years, whenever I file income tax returns, will I have to, report these losses in order to carry them forward? The answer is no. You only have to, in your current year, when you are filing your return, if you want to carry forward, only in current year you have to report those losses. The only other time you will report those losses in your tax return is when you have a taxable income and you want to bring forward those losses and set them off against those taxable incomes. In that case, you'll have to report it in income tax return, but otherwise you don't have to, right? So I think this pitch deck I'm going to share after this presentation as well. You will find it in the description of the YouTube video. And you can reach out to us on help@quicko.com or on our Q&A forums, and we'll be more than happy to answer some of your questions. Now, moving on, I think tax loss harvesting is a little untimely. Usually people look at this towards the end of financial year. However, I wanted to set expectation that it's not just why you should take control of your taxes is for this kind of reasons, that you have tools and methodologies available through which you can save taxes by being proactive, by learning some of those things during financial year. So please make sure, while of course you are here to file your income tax return for this year, when you are wrapping up your financial year next 31st March, please make sure that you take advantage of something like tax loss harvesting. I know it's usually complicated. It's only accessible to people who have who are HNIs and have access to year-round tax consultants. However, we are trying to democratize all those tools and algorithms. So on Quicko also you can go and look at your tax loss harvesting, whether it is applicable to you, whether you can take benefit of it or not. Now, the common question is this allowed or not, Vishwajit? And income tax department does not explicitly prohibit anywhere that you cannot take advantage of it. In fact, what we see oftentimes investors doing is something called tax gain harvesting, which means if your capital gains are less than 1 lakh, because up to 1 lakh long-term gains are exempt under Section 1038. Oftentimes people kind of, realize those gains up to 1 lakh. It becomes a tax-free return. So that's tax gain harvesting. Compared to that, tax loss harvesting is essentially if you have gains, realized gains. Realized means you have already liquidated that position and you have gains on your P&L. Then in that case, if you have unrealized losses in your in your portfolio, in your holdings, then you can liquidate those positions as well, realize those losses and offset them against the gains, right? And hence reduce your taxability. Now, this is called tax loss harvesting. You should, consult a chartered accountant, or you should consult, you should use an online platform which can help you do this. Oftentimes people ask, what if I want to be invested in that in that particular script? I want to hold that position. What can I do in that case? In that case, oftentimes what we have seen is people after a few days reacquiring those positions, so that you have taken advantage of tax loss harvesting, plus you are able to hold the positions that you are invested in. So that's tax loss harvesting. Now, gifting of shares, very common topic. Oftentimes, people confuse gifting shares to loved ones versus gifting shares to an employee versus gifting shares to a friend or colleague. I think when we talk about gifting of shares, you have to remember two things. One, whether the amount of gift is greater than 50 or less than 50,000. The second thing is the receiver of the gift. Let's say in this case, we assume that you are the receiver of gift. So if you as a receiver, whether you are blood relative of the sender or not, right, or a spouse of a sender or not, right? Now, why do I say this? Because if gift is less than 50,000, it's completely not taxable, neither taxable to sender nor taxable to receiver, right? It's completely exempt. You don't have to be a relative to someone in order for you to receive less than 50,000 rupees in gift, right? Oftentimes, gifting of shares, rules around gifting are similar, whether it is shares, be it shares, or a lot of time wedding related gifts. Ke point of view, people have questions. If I receive wedding gifts, do I have to pay taxes on it? The same rules apply. If it's less than 50,000, then you don't have to pay any taxes on it. If it's more than 50,000, I'm sure. I mean, you are immediately rolling your eyes. India, big fat weddings gifts are definitely going to be more than 50K. In that case, you'll have to see whether you have received it from relative. And if you have received it from relatives, then it can be tax exempt. Now, if the amount of gift is greater than 50,000, then like it says here, if you've received it from relative, then it's exempt from taxes. If you've received from non-relatives, then in that case, it's considered income from other sources, and you will have to pay taxes on it. Now, oftentimes people confuse between receiving a gift and then later on selling it, right? So let's say you received shares and later on you sold those shares on the in the market. Then what's the taxability? So in that case, you have to remember that receiving a gift is one thing. Once you receive the gifts, those are your possessions, your holdings. When you sell them, you will have to pay capital gains on it, right? So when you receive the gift, there's no taxability if you receive it from relative. But when you sell it, there's taxability. However, income tax department has given you a little bit of relief by saying that you will have to pay capital gains only on the amount of appreciation since the point as such when you received it, right? I'll give you an example. Let's say your grandparents bought Infosys shares in 1990s and gifted it to you recently, right? Now you are millennial, Gen Z, you want to invest in Swiggy or Zomato or some of the newer platforms, right? What you ended up doing was selling those shares. So in that case, do you have to pay tax on when your grandparents bought it, what was the price, and when you sold it in the market, what is the price? Do you have to pay tax on that difference? The answer is no. You only have to pay tax on when you received it from your grandparents, what was the fair market value or the last traded price of that stock. If it's listed, then last traded price. If it's unlisted, then what's the fair market value? To the point that you sold it, वो जो difference है, अगर वहाँ पे profit है, तो उस पे आपको tax pay करना पड़ेगा. So I think that kind of very commonly asked question, Vishwajit, can we receive a gift and then we sell it? I've received it from my parents. I don't have to pay any taxes, right? So the answer is, when you receive gift, no tax. When you sell it, there will be applicability of tax. Okay. Now, this part, in the interest of time, I think we have about 10 minutes left. So I want to very quickly focus on one or two very important documents. You all know Form 16 is a TDS certificate. Usually you receive it from your employers. So I'm not going to spend a lot of time. I think a lot of salaried individuals know about it already. Form 26AS is a tax, your tax credit statement. Any TDS, TCS credits against your PAN will be reflected here. More importantly, I want to talk about AIS, Annual Information Statement. Now, this is a new statement that Income Tax Department has rolled out over the last few years, and its importance has been increasing quite a lot. Why, you ask? It's primarily because all your financial transactions are reported to Income Tax Department because your PAN and Aadhaar are now linked. Something as simple as bank paying you interest has to go and report that interest to Income Tax Department. If you receive dividend from AMCs or from the companies, listed companies directly, then in that case, those companies or AMCs will have to go and report that to Income Tax Department. If you are doing, if you are buying and selling stocks or mutual funds, in that case, depositories, CDSL and NSDL will have to report the transactions to Income Tax Department. So all of those transactions reflect in something called AIS, along with your salary and any TDS, TCS credits, and your any advance tax you paid. Along with that, all these transactions plus things like property transactions, foreign trips, foreign remittances, crypto transactions, all of that will be reported in your annual information statement. So for last couple of years, we've started advising our customers, our tax experts, that before we file anyone's income tax return, we should look at AIS and make sure all the data that's reflected in AIS is reported in income tax return, because this is very common reason for people to receive notices these days is because their AIS says they sold a mutual fund, but they didn't report it in their income tax return, or AIS says that they received FD interest or bank interest and they did not report it in their income tax return, right? Be it a small amount or not. Okay. So please pay attention to AIS. You can easily access it from your income tax account. It's downloadable in both PDF format, and you can also download the utility and view your AIS in the utility. All right. Now for our audience, capital gain statements are very important if you are investing into mutual funds. SIPs कर रहे हैं अगर आप तो आपको डेफिनेटली कैपिटल गेन स्टेटमेंट मिलेगा. आप अपने ब्रोकर से डाउनलोड कर सकते हैं, IIFL में लॉगिन करके डाउनलोड कर सकते हैं, या आप RTA के थ्रू भी ये CAMS एंड कार्वी जो कि RTAs है, रजिस्ट्रेशन ट्रांसफर एजेंसीज, इनके थ्रू आपको कैपिटल गेन स्टेटमेंट मिल सकता है. अगर आपने जैसे कि IIFL से डाउनलोड किया तो आपको ओनली IIFL के थ्रू इन्वेस्टेड म्यूचुअल फंड्स का स्टेटमेंट मिलेगा. बट इफ यू गो टू CAMS और कार्वी, यू विल see it across all AMCs, right? The statement will have transactions across all AMCs. So make sure you download your capital gain statement before you file your taxes this year. Now, tax P&L statement is usually provided by brokers. And how is it different than capital gain statement? Capital gain statement, while only focuses on capital gains, so essentially equity delivery or mutual fund transactions, tax P&L statement also covers intraday, short sells, F&O transactions, etc. Right? So you can download it from your broker, and this is where Quico is really awesome. Investors and traders love Quico because what we do is, with your consent, if you authorize us, we can go and programmatically read your tax P&L statement. We work with our broker partners to streamline tax P&L statement, make sure that all the transfer expenses are accounted for, FMV formulas are applied, corporate actions are taken care of. So we go and read this tax P&L statement so that you don't have to download it, upload it onto a platform, or you don't have to manually type in hundreds or if not thousands of trades, right? So tax P&L statement is very important. Please make sure before you file your return, either you file it yourself or you file it through chartered accountant, you provide the statement to them. Now, last but not the least, ITR forms. A lot of people have questions, which ITR form should I file? I think if you use Quico, you don't have to worry about it. We decide it for you based on your income situation. However, if you are using government utilities, then you need to know the ITR forms. ITR 1 broadly covers salary income. All the salaried individuals file ITR 1. So of 8.5 crore income tax returns filed last year, about 3.5 crore, 4 crore returns were ITR 1s, which is essentially salaried people uploading Form 16 and filing their income tax return 1 form. All the ITR forms are accumulative in the sense, as you go through ITR 1, 2, 3, they cover everything that the previous ITR covers plus something, right? For individuals, you only have to worry about ITR 1 through 4. The other ITRs 5, 6, 7 are applicable to companies and trusts and those kind of non-individual entities. So we'll focus on individual ITRs. ITR 2 is for capital gains. Like I said, if you're investing into stock markets, equity delivery, mutual funds, then you'll have to file ITR 2. ITR 3 is for business professional income. That means if you did intraday or derivative trading, in that case, you'll end up filing ITR 3. But now ITR 4 is an open secret. A lot of people know about it. Some people don't. But if you are a micro business, you can take advantage of a presumptive taxation scheme. Essentially, the scheme says that if your turnover is less than 2 crore and if you willing to report at least 6% of that turnover as a profit, so 2 crore hai to 12 lakh rupees as profit and pay taxes on it, then government doesn't want to peek into your books. They don't want to know whether you've been maintaining books of accounts, whether you've been, whether you have claimed expenses, whether you have profits or losses. Government doesn't care as long as you pay taxes on 6% of the turnover. We see a lot of investor traders opt for presumptive taxation scheme. The only thing I would say is if you opt in and then next year you opt out, then in that case, there'll be higher scrutiny. If you have losses, you will have to get your books of accounts audited and things like that. So make sure you take someone's advice before you opt for the scheme. Now, tax audit is a taboo. Not a lot of people want to talk about it. There's a lot of confusion around it. And every other person you ask will give you a different advice. Oftentimes, customers also come and ask us, hey, Quaco, you are saying that tax audit is applicable or not applicable, while my chartered accountant says otherwise, right? And to that, Quaco is a tax platform. We are not a CA firm. What we do is enable our customers to take, smart decisions. So our algorithm, essentially based on Income Tax Act, it doesn't have any biases. It doesn't create any exceptions. Based on Act, whatever are the conditions, uske basis pe it recommends you tax audit, whether you fall into certain bucket or not, right? However, we delegate it to our customers and their chartered accountants, whether they want to follow a recommendation or not. They can decide to, not get their books of accounts audited, even if Quaco has recommended it. But our goal is to just make people in general aware about it and, essentially kickstart the conversation, right, is the goal. And a lot of customers also like and appreciate it that, through your algorithm, I was able to know that I have audit applicable and, I was able to find a chartered accountant who could audit my books of accounts. So audit is applicable in one of the situations if your turnover exceeds 10 CR, right? What is turnover? In case of, business, turnover is very simple. Turnover is, your sales proceeds, your gross sales can be considered turnover. But if we talk about F&O, intraday businesses, then there's the definition changes a little bit. It's called absolute turnover. So it's like absolute values of your profit and loss. Let's say आपने 5 रुपए का profit किया and 5 रुपए का loss किया, so your absolute turnover will be 10 rupees. Okay. In case of traders, we've seen that turnover usually doesn't exceed 10 CR. You have to do a lot of active trading in order for your turnover to exceed 10 CR. But just in case your turnover is greater than 10 CR, then you should get your books of accounts audited from a chartered accountant. Now, what if your turnover is less than 10 CR? This is where it becomes really murky. Oftentimes, where turnover is less than 10 CR, people are trading with smaller corpus and hence they don't want to pay for tax audit. Tax audit oftentimes is expensive as well. So in that case, I think general rule of thumb is if you made losses, then it's always a good advice to, get your books of accounts audited so that you are sure that you are accurately reporting things. And if tomorrow you have to defend it, right, if there was a scrutiny that why did you report losses, then you have all the sufficient documentation and you have a chartered accountant who has certified it. right? However, we've seen that, where micro traders, having few thousand rupees ka losses or few lakhs of rupees ka turnover, ignoring audit and not getting their books of accounts audited. I think income tax department has taken quite a liberal view, like in that case, right? If you are an extremely micro trader, then sometimes you can also get away by not getting your books of accounts audited. What I would say, general rule of thumb, if your turnover is greater than 10 CR, then get your books of accounts audited. If your turnover is less than 10 CR, then if you have substantial trading and good losses that you want to carry forward and set off in future years, then I would suggest that you get your books of accounts audited. If you are an extremely small trader, you have nominal losses, your primary activity is not trading, then it's okay to not get your books of accounts audited. But it's always advisable to talk to a chartered accountant. Now, very quickly, I'll try to show you how you can file your taxes using Quicko. And then I think if there are any questions, I'll take up those questions. So in order to file your taxes, you will have to head over to Quicko.com. We also have a partnership site called taxfiling.indiainfoline.com. So you can start in either places. You can also start from IIFL, your IIFL trading platform. There are links to file your income tax return using Quicko there as well. We help hundreds of thousands of IIFL customers every year do their taxes using our platform. So we would love to help you as well. If you are a returning customer, then thank you for entrusting us with your taxes. And if you are a new customer, we look forward to seeing you on the platform. What our customers most like is that they can log in using their Demat account. I think I had already, okay, I'm not logged in. So let me log in. I might have to enter OTP. So I'll very quickly enter OTP. So the good part about using IIFL Quicko integration is, if you are an IIFL customer, you don't even have to open Quicko account. By logging in through your IIFL account, you automatically onboard onto Quicko. We have your consent with us to access, your P&L data. You can always go and disable the integration if you go to the integration bit, and I can simply revoke any of these integrations that I may have granted, right? So I can click on revoke here, and that will disconnect my IIFL account from my Quicko account. However, once you are in, like I said, as engineers, as designers, what our focus is on, how do we make our product and our interfaces consumable, right? For common people, it shouldn't feel overwhelming. It should feel simple. People should be able to do things that otherwise they are able to do on other mobile apps, right? UPI apps or, investment apps. As you can see, it's a breath of fresh air. The interface is very simple. You can either plan your taxes or you can file your taxes. Because 31st July is here, we're going to focus on filing taxes. When you click on start here, you have two easy ways to start. Either you can import all your data from your tax account, income tax account, or you can start manually. For purposes of this demo, I'll just say I'll do it myself. However, let me tell you, 90% of our customers import their data directly from their income tax account. So I would definitely recommend you trying that out. The platform is very simple. On the left-hand side, you can see that you have to report your incomes, your deductions, your tax credits, and your bank accounts. This is the primary information that you need to report in your income tax return. And it's very easily presented here as well, right? So if you go to salary, you have multiple ways. You can import it from your tax account. You can also upload a Form 16, or you can enter it manually. Most of our customers either upload Form 16 or import it from income tax account. Our customers most love the feature of broker integration, right? So if you have capital gains, if you are trading or investing, you can simply go to our capital gains module, and you will say, I want to import it from my broker. And because I have an IIFL account, I'm going to choose IIFL. And it says what all data comes from IIFL account to Quicko. So almost all your trading data comes from IIFL to Quicko, except bonds and debentures. So in that case, by clicking on continue, I'm essentially starting to import my data. This is my test account, so I don't have a lot of data, but I have one trade. So it already imported that data. It categorized, here, surprisingly, my buy average and sell average is all same. So I have no gains, no losses. So there's everything zero here, but it automatically imported my data from my IIFL account. Let's see if I had any intraday FNO activity. I actually did. So in my IIFL trading account, I have some trading activity. So that also got imported automatically. If I go here, it will immediately tell me that from FNO, I have about 8 rupees losses. And from intraday, I have no activity in intraday. So what Quicko also does is it imports all the expenses. So all your transfer expenses, including your brokerage, your STT, your GST, stamp duty, all of that is automatically imported. Clearing house charges, exchange turnover fees, everything is automatically imported. If you have multiple Demat accounts, if you trade through multiple platforms, then also it's supported on Quicko. So you can simply go and click add, and you can import from another broker, right? It's that simple. And this is what investors and traders really love. Most of these brokers we have integrated with are tech-enabled brokers, and they have awesome text P&L statements and reports that we can go and plug into. We've seen tremendous transformation over the last 3-4 years, where all the brokers have kind of streamlined their P&L reports so we can easily consume it. So kudos to all the brokers as well for enabling investor traders to do their taxes easily. So I think that broadly covers everything I wanted to talk about here. If there are any questions, I would be very happy to take them up. Prajwal, back to you. If we have questions, we can have a Q&A and then wrap it up.
Hi, Vishwaji.
Hi,
There are
Ashok.
some questions in Q&A section. Can you please answer them?
Okay. I think I am able to read the chat.
Yeah,
So
yeah.
So
There are some questions in chat box and some in
the
Q&A.
Q&A. Yes. All right. So I'll try to go through as many as I can.
Sure.
So I'll read out the questions and I'll answer those for all of you who are listening. So does interest from NRE account need to be shown in exempt income by NRA, or can be ignored as this is exempt from taxes? I think quite frequently NRE and NRO account related काफी confusion होता है. I think primarily what I want to differentiate is between residents and non-residents, right? So residents having foreign income, that means if you are residing in India, which is essentially you were in India for more than 180 days this past financial year, then you are considered resident. And if you are a resident of India, and if you, let's say, earn you received salary from outside India, or you have trading you have trading account, Demat account outside of India, then that is more complicated, because in that case you have to pay taxes in the foreign jurisdiction, plus you have to report it in your Indian income tax returns. However, if you are an NRI, then only incomes you need to report are the incomes that are accrued in India. Right. So if you have a rental property, ancestral property that you have rented out, if you have sold, these are common situations that we come across with NRIs. If you have sold a property while you were in India visit, then in that case, those incomes you have to report in Indian income tax return. If you are trading or investing through Indian Demat accounts, then you have to report all the NRO account interest you will have to report. Right. I think it's very important to understand that resident with foreign income is more complicated. NRIs have very simple income tax returns. I think another question I'm saying is loss in FNO trading to be adjusted against intraday profit or short-term profit. So loss from FNO can be set off against any income head except salary, right? So salary के अलावा बाकी सारे profits या gains के सामने आप set off कर सकते हो. So that means आप intraday profit के सामने भी set off कर सकते हो. And short term you can also set it off against capital gains, short term or long term capital gains. All right, I'll go to Q&A. The dividend received as per books and AIS figure are different, and if later is higher, what shall be taken in the ITR against the ITD figure So I think this is a very good question, actually. What happens is you are investing into stocks through multiple channels, right? You can directly in your Demat account hold shares in dematerialized form. What you also can do is you can invest into mutual funds, which in turn then which in turn hold some of the shares for you. And oftentimes this dividend that is paid may or may not directly pass through your Demat account, right? Companies directly pay it to you. Your mutual fund AMCs, asset management companies, directly pay it to you. So oftentimes you will not see that data come through your brokers or through your AMCs completely because they don't know the complete scope of it. And hence, I would usually consider AIS as the a more complete source. However, what happens in AIS is 31st May is the due date for AMCs and depositories and companies to file something called Form 61A, which is the form through which they disclose to Income Tax Department all the specified financial transactions. So I'll request you to wait out until 15 June before you start looking at AIS, because that's when it's most up to date. Because 31st May is the due date and it takes about 10 to 15 days to process and reflect it in AIS. So I would request you to look at AIS as a more complete source of truth. That doesn't mean that data is not broken sometimes. Once in a while data is broken. In that case, you will have to, it will be a little difficult for you to reconcile things, but mostly AIS is a good place to start. Another question is, loss in F&O trading to be adjusted against intraday or short-term profits. I think I already answered it. It can be set off against loss from F&O can be set off against everything except salary. Can long-term losses be adjusted through long-term capital gains after selling MFs SIPs? Of course, I mean, long-term losses can be set off against long-term gains. Like we saw on the loss slide, long-term losses cannot be set off against short-term gains. That's the only caveat. Which ITR has to be filed by us? Like I said, if you are an investor, if you're just simply salaried, then ITR 1. If you are an investor only investing into equity delivery and mutual funds, then it's ITR 2. And if you're doing F&O intraday trading, then ITR 3 you will have to file. If you come out of Quico, you don't have to worry about which ITR to file. For transmission of shares from parents, which value should we take as cost? So there is a concept of fair market value, right? So whenever you receive the possession of the shares, right, either in dematerialized or physical form, whenever you receive the shares, you can take the fair market value of shares on that day. And based on that, the capital gains will be applicable to you. Can derivative loss set off again long or short-term capital gains? The derivative loss can be set off against, again, F&O loss can be set off against any income heads except salary. So I think a lot of people have questions around F&O losses. F&O trading turnover liable for tax audit. Like I said, if your turnover is more than 10 crore, irrespective of profit or loss, you should get your books of accounts audited. If your turnover is less than 10 CR, like I said, if it's, you are a regular trader, there are substantial losses, you want to carry them forward, then it's always a good advice to get your books of accounts audited. I am not a chartered accountant. You should seek a chartered accountant's advice to get your books of accounts audited. I think those, I see some repeating questions, but I think those are most common questions. I think the last one was LLP taxation. I think, there are, when it comes to LLP, you have to separate out the partnership from you as an individual. So if you have received any remuneration from LLP, then, in form of salary, then you have to report it in your income tax return. If you're talking about any trading investing that you do through LLP, then of course, those will be completely taxed against your LLP's PAN. And the tax rates there are very identical, like capital gains are very identical, whether it is businesses or individuals. I think we are running out of time with that. I hope I was able to, clarify a lot of doubts. If not anything, I hope I was able to give you a right direction in terms of where to look for answers for your questions. And we are, me and my team are always available, on our support forums, on text Q&A, on our Twitter handles. So if you have any questions, please do reach out to us and we'll be more than happy to help. I think, Prajwal, Akshita, we can wrap up the webinar.
Yes. Thank you so much, Vishwajit, for the amazing session. And thank you, attendees, for joining the call. Thank
Awesome.
you.
Awesome. This was good. Thank you very much for
Thank
having
you very much. Thanks.
Thank you, Vishwajit. Thank you, everyone.
us. Thank you. Bye.